The final topic for this chapter is financial statements. So what we said at the beginning when we were talking about accounting, we were talking about how the whole purpose of the accounting cycle is the preparation of financial statements that will be used by specific users in making decisions about the company. What we're going to look at first is a general flowchart or diagram, if you will, of the financial statements. So there are four financial statements that companies prepare: the income statement, the statement of retained earnings, the balance sheet, and the statement of cash flow. In this course, we are not going to prepare the statement of cash flow. However, later on in the course, when we work on a project, which I will explain or we'll get to later on this semester, I'm going to teach you how to use the statement of cash flow in order to interpret it and determine where companies are getting their cash and where's their cash going. So what I'm going to do is the next 3 slides are actually illustrations from the textbook, and what they lay out are the financial statements. We're going to look at the format, the types of accounts that are on each statement, and how those statements are related. And then the order in which those statements are shown are the order in which they need to be prepared. Even this slide right now shows us the order. We need to prepare the income statement, followed by the statement of retained earnings or the retained earnings statement, the balance sheet, and the statement of cash flow. All right, so on this first slide, we have SoftBite Inc., and that was the company from the transactional analysis. And it's a new company, first month of operations, so we're preparing the financial statements for the month ended September 30th, 2017. A couple of things to note. First of all, in the heading of the financial statements, the name of the company always goes first. Secondly, the type of statement goes second. And then the third line is for the time period. So in this case, we have for the month ended September 30th, 2017. It could also be for the quarter ended September 30th, 2017. Or if their fiscal year ends on September 30th, it could be for the year ended September 30th, 2017. There are 2 types of accounts on the income statement: revenue accounts and expense accounts. And the income statement is the profitability statement, so it'll tell us whether or not the company is operating at a profit or a loss. So, first thing is we list our revenues. For the most part in this course, we will have one source of revenue. Sometimes we will have 2. So the revenue comes first. So in this case, we have $4,700 of service revenue. We have 4 expenses, and the expenses are typically listed in descending order in terms of amount. And if you notice, the individual amounts of each expense is indented to the left. And the reason for that is that it makes it easier and cleaner to then calculate the net income or net loss. So once we've listed the expenses, then we total them up, and that total goes right under the total revenue. In this case, the expenses are less than the revenue, so we have net income or a profit. If the expenses were greater than revenue, then we would have a loss. So remember what I said about retained earnings. Retained earnings includes all of the undistributed earnings from prior accounting periods. So therefore, that net income figure has to go into the statement of retained earnings. Since this is a startup, this company does not have beginning retained earnings balance. Had this company been in business for a while, then we would have a balance for retained earnings as of September 1st. So we start off with the beginning balance. To that we add the net income, in this case $2,750. So we have a subtotal of $2,750. Of that, $1,300 will be distributed in terms of dividends. So the $1,300 will be subtracted from the subtotal to come up with the retained earning balance on September 30th of $1,450. All right, so next, on the next slide, we have the statement of retained earnings again. And the reason we do that is because that retained earnings balance is going to have to be reflected on the balance sheet. Now, if you look at the balance sheet's heading, you're going to see something a little different. You see September 30th, 2017, as opposed to for the month ended September 30th, 2017. And the reason for that is that the balance sheet is a snapshot as of a particular date of the financial condition of the corporation. So therefore, if we prepared a balance sheet on September 29th and then one on October 1st, we would see a difference each day on that balance sheet. And the reason for that is because of the transactions that occur between September 29th and September 30th, and then between September 30th and October 1st. What I want to point out to you in terms of the assets are listed in the order of liquidity. And what we mean by liquidity is the order in which they can convert to cash, or the ease with which they convert to cash. So obviously, cash will be the most liquid. Accounts receivable, that word receivable. SoftBite expects to be receiving cash from its customers, so therefore that would be next. Then we have supplies. Supplies would be used up within a short period of time. So when we're talking about supplies, we're talking about things like computer paper, ink. We're talking about pens, pencils, whatever supplies that are used, just to run the business. Now, there are several other assets, but we're just starting out. The equipment is what is known as a fixed or a plant asset. And the equipment would be considered the least liquid of all assets because you're not going to sell that equipment. You're going to be using that equipment as long as you're in business to operate the business. All right. Once we've listed all of our assets, we add them up and we come up with the total assets of $18,050. Now we go to the liabilities and stockholders' equity section of the balance sheet. In this case, we only have one liability, which is accounts payable, so that makes life easy. And we don't have to put a total there because we only have the one account. Under stockholders' equity, we have common stock of $15,000 and the retained earnings balance of $1,450, which we calculated in the statement of retained earnings. So if we add the common stock and the retained earnings, we get total stockholders' equity of $16,450. So now the liabilities plus stockholders' equity equals $18,050. We have maintained the equality of our accounting equation. So therefore, in the balance sheet, the assets equals liabilities plus stockholders' equity. And that $18,050 should look familiar because that's the number that we came up with when we looked at the transactional analysis example in the prior PowerPoint presentation. The next slide I'm going to show you shows the balance sheet, and then what it shows is the connection between the balance sheet and the statement of cash flow, and we're going to leave that at that. All right, each of these slides gives more information about the income statement, the statement of retained earnings, the balance sheet, and the statement of cash flow. And as I look at the income statement slide, I've already said everything that's on that slide, but you can look that over at your leisure. And, oops, I went backwards. Okay, sorry about that. And then the retained earnings statement, again, we've talked about that. The balance sheet, I have gone through all of those bullets. And then the statement of cash flow. When we go to look at companies that we're going to analyze, we're going to be looking for answers to those three questions. Where did the cash come from? What was the cash used for? And what was the change in the cash balance? And that ends this part of the lecture.